Our next guest on stage is a special one.
And a very warm welcome once again. Good afternoon. On the stage with me is one of India's longest serving bankers, a banker who came back from overseas amongst the few who did. And in a world where in the recent past we have seen big banking names go under in some ways, we've seen turmoil in the NBFC sector and all manner of issues in the financial sector, the bank that he has helmed and will continue to helm for a few more months as one of the longest serving MD and CEOs has continued to remain rock solid. And on that context, I want to ask you, is this the best state of the Indian economy, banking system, corporate confidence that you have seen in the past decade and a half, Shyam?
Yeah, thanks everybody. Thanks for that. Yeah, I would say without a question, without a doubt, this probably looks like almost like a Cinderella moment for banking, right? For economy and certainly for banking. So everything looks in a good place. Every now and then there are patches of brilliance, but I think for a sustained period, more importantly with an outlook that looks quite positive in a rather uncertain external environment, is probably the best period I've seen in a long, long while.
Indian banking was a source of worry 10 years ago, the great NPA bubble, and reports by top brokerages used to talk about the house of debt. If you were to advise any brokerage house to write a report today on the state of Indian banking, what would be the topic that you would give them?
Wow, okay. That's a good question. I think the message that I've believed for quite some time is that, I used it actually, it is the Cinderella moment for banking. But I think the biggest message that people should take away is India is, particularly banking, is in a sweet spot, not because of by accident, it's by design. And what has happened on many counts, the fundamentals have dramatically changed. So I think whoever's coming in looking to invest, looking to participate in the India growth story, can't back a better horse. I think it's the a time when almost everything looks set for good growth. Typically a bank needs capital, needs good credit quality, and needs great governance. If you look at it, all banks, without exception, are well capitalized. All have, an industry which had mid-teens of NPA is now like 3% at an industry level. So you can't ask for a better time in terms of opportunity to both grow and participate. And of course, technology is just fundamentally re-architecting the whole space.
You mentioned the word design, and therefore I have to ask you, who are the designers of the great Indian banking turnaround?
You're putting me in a spot now. No, let me say. See, these things again don't happen by accident, right? I mean, if you say the design, if you take any slice of time, and since we're talking about the last decade, certainly the many initiatives by regulators have been quite exceptional in terms of started with the cleanup of credit, started with the level of external environment that has come in terms of the payment architecture in India is just mind-blowing, right? Today, sitting here, you and I can be talking, but within a couple of clicks, the money can move. I don't believe any country, anywhere in the world has anything like that. So one is the architecture of how money moves. Second is the portfolios having been cleaned up. Third, an economy that seems to be sort of navigating all cross currents, any external shocks quite well. So the ingredients are in place, and I would believe public sector banks, certainly the government has had a very rich role in capitalizing them, absorbing a lot of bad credit related costs. So capitalized by public sector banks, cleaned up banks because of all the regulatory changes, a superb infrastructure and payments, and a generally buoyant economy all sort of helps the process.
I don't know how many people know about the kind of technology-led work that you've done, but on a broader note, because you touched upon that point, we have one of India's best FMCG companies, the largest, of course, Mr. Puri here. And one of the key things that transformed FMCG engagement with Bharat, not just with India, was the trend of sachetization, very small packs, which made it more affordable. For Indian banking, what's been the inflection point, 2016 and payments, or has it been the overall recourse to Aadhaar, the India stack, KYC, which has transformed the way the retail experience is for Indian banking customers?
No, clearly the same principles, right? Whatever can be delivered in small packets is certainly the outreach is superb. So I think, like you mentioned, the Jam Trinity, the ability to do virtually anything on your device, the ability to ensure that it comes in small packets, and most importantly, I think today, sitting here as a bank, India has about 19,000 PIN codes. Right? As a bank, we physically operate only in about 6,000 PIN codes.
6,000 out of 90?
Yeah, as a bank, physically. But we do banking with customers in 18,000 PIN codes. So you could quite imagine how the ability to reach out to the extreme corner of the country, the client may have never seen the bank in any fashion, but through a digital capability, he or she is able to onboard themselves onto the bank. Yeah, there are initiatives post that you need to do, but at least the customer gets going. So I think the biggest thing in the equivalent of sachetization would be the whole ease of opening an account, engaging with a bank from anywhere, anytime, whenever.
Are you a believer in big banks, or do you think that India needs more banking licenses to be handed out?
I think this debate will keep going on. I have a view that size is important, size matters. Being small is good, but then in the world we live in, particularly in banking, where capital is a principal, the only resource a bank has capital and money, right? Deposits. The reality is when you want to scale up, you need capital. And it's not going to happen if you're not of size. So yes, you may start small, but you will see a natural gravitation towards becoming bigger. So is the answer only big banks? No. But will anybody who starts in any size and shape and form will ultimately become big or seek to become big? Yes. I do recall, not very far from now, a few months ago, just in this very venue where you are sitting, I delivered a speech to our analysts and investors in this room. When I made the case that, why I believe consolidation in some form is real, and banks like us, we've come from being some 7th or 8th or 9th bank in size, now we're kicking the doors of being in the top 5. Right? And I do believe size matters, right? If you get into the top 5, you're at the table. Otherwise, you're on the menu card. Right? Somewhere you have to be on the table to make those decisions, ask for the money, get the capital and growth. So I think size matters, but not everybody is going to be parachuted through size. So you need to work through that process, but ultimately size will define where you sit on the table.
We started with getting a broader sense from you on the Indian economy, but the cost of capital is one of the biggest issues. Inflation seems to be moderating, growth is doing fantastic, 8%. Who would have imagined that one would see a estimate from a global agency saying 8%? Imagine, I don't think any of you a year back would have even imagined that number at 8%. Given that context, when do you think the reversal of the rate cycle in India is likely to happen?
I don't know, somebody asked you to ask all the difficult questions. No, I think if you closely observe and listen to the governor, particularly after every MPC, he makes it very clear that inflation at around 4% is the trigger for them to do any kind of activity, right? And that seems to be still a little far away. We are still in the 5% odd. So I think a rate cut, if you will, looks more like a later part of this calendar year or even early next year. But it doesn't look like an imminent activity. That said, I think the message that people are, of course, rate cuts are nice. People, want to believe that their loans will get cheaper and stuff like that. We must remember that ultimately deposits also will be lower cost, right? I mean, you'll earn lower. So I don't believe it's going to be a dramatic shift. And even if it's 25 basis points, 50 basis points over a year, it would not going to change the narrative. I think the underlying predictability and consistency of an economy is more important than where the rates are. And probably the investments are likely to come as predictability increases.
Do you believe there is irrational exuberance, or there has been irrational exuberance in lending, especially on the NBFC side, and the regulatory actions that we have seen in the recent past were required?
No, I think we should not correlate the two. We must be very careful, right? I know the narrative is to try to put one and the other and conclude that this led to the other. The actions that are being taken from the regulator are not to contain exuberance. It's contain or to remedy some governance failures. I don't believe it has anything to do with anybody doing growth as long as it's compliant growth. At this juncture, credit growth, which probably the last two data points suggest slightly moderating, looks still in the high teens, right? Which is not a surprise. If the economy is growing at 7.5%, it's not odd that the credit is growing at 2x of the economy. What may stymie that if the deposit growth doesn't keep pace with that, right? So I think the more important narrative is how does money supply increase? And as we all know, money creates money. So as credit growth increases, it is going to, sort of almost ensure there is deposit growth. So I do believe the growth in credit is not being contained or constrained by, you haven't seen any bank being called up to reduce credit growth. Yes, if there are pockets of exuberance, I think that's being sort of called out. But I don't believe the current NBFC issue should be read as equal to reduction of credit growth.
Shyam Srinivasan, 13, 14 years ago, you took a call to move from a large bank to a small entity. Must have been a tough call. The Indian economy was different, the context was different, the companies that were the top 50 then, perhaps very few of them are in the top 50 today. Would you do it again today?
Absolutely, a heartbeat I would. I would do it only because the very fact that you ask us this question means something good has happened and gives the bank the opportunity to present itself in a platform like this and be recognized for that. And I do think it's a big decision for any organization and I said, being small is cute, but I think being at the table matters more. And so I think I would encourage many to do that, because what we are seeing in India is a trailer, right? That's why we're talking of Atmanirbhar Bharat and the various things. All that we are seeing, if you look at 2047 or 2035, whatever that is, what is $4 trillion? Nothing. If you're a part of a 10, 12, 14, 15 trillion dollar, this is just still early days.
It's still early days and picture abhi baki hai. Shyam Srinivasan, we wish you all the very best for your next innings, because I know with you, picture abhi baki hi rahegi. Thank you very much for your time with us today.
In this session,